Hello everyone, Alberto Murillo with eXp Realty, and I wanted to do a very quick video with my preferred lender, Erika Slayton. How are you, Erika?
I'm doing really well, thank you.
Awesome.
Officing out of home.
Yes, we're working from home, so that's why we're doing this Zoom video meeting. Erika, tell us a little bit about you, very quick.
Sure. So I am a mortgage loan officer, and I've been licensed now or in the business for 24 years, and been helping here in San Antonio and around the state of Texas to be able to buy their home or investment property or lake house or whatever. I've been really honored to be able to bless a lot
Awesome.
of families being able to buy their house.
Awesome. Okay, so the main reason of this, video chat. It is, of course, coronavirus. It is trendy. We're suffering, and I have 5 questions for you right now.
Yes.
Are mortgage loan officers also considered an essential service?
Yes, we are, because we are in the banking industry. So therefore, we are considered a essential business. However, I myself and my office is working from home to be on the safe side.
Right. Okay. Also, real estate. Well, real estate services also, I believe, is changing, right? Based on county, based on the state. We're blessed because here in San Antonio we are essential, but there are some places in the country and different counties that are not essential. So it definitely is going to hit the
Right.
economy and the housing market. Second question, very quick. Is the coronavirus about to wipe out the FHA lending?
No, it is not going to wipe out FHA lending or VA or USDA or conventional. What it's doing is it's temporarily, in this little smidgen of time,
Okay.
changing the ball game. So
Okay. So, because what are the changes that just recently happened?
So basically, the reason why is because if you opt to go into what's called a forbearance for your mortgage payments because you can't afford it,
Okay.
what ends up happening is someone has to make your payment for you. So the servicers are the ones that are actually making the payments to the investor. So if you choose not to pay, the servicer still pays, the investor gets paid, and guess who's out the money? The
Okay.
servicer. The servicer's out the money. They have to write that check. So the problem is right now, in a very small little blip, and it is a blip in the grand scheme of things, is that those servicers want to make sure that they can get paid back. So the government right now is in talks to try to figure out how can we get the servicer covered too, so they're not out that money.
Got it. Got it.
So it's
Now, quick changes. I heard that the credit score went up to qualify for a mortgage right now. Is it?
It did on Friday, and then it bounced back down to get to again today. So I'm telling you, literally, the guidelines are changing very, very quickly from 1 minute to the next. I think that, for example, on Friday, I heard one thing in the morning, and by 11:30 it changed, and then today it dropped back down again. So we were at 580 on Thursday. By Friday, we went to 680, and then today it dropped back down to 620.
Crazy. Okay.
Very.
The third question, which is for the homeowners. Okay.
Yeah.
Current homeowners mortgage, can they, what's the difference between deferring the payment and what is called forbearance? What is it?
Okay. So deferring is basically where you're deferring that payment on down the line, and you're not going to have to pay it anytime soon, right? So you're moving it out. What we're really doing in this time right now under the coronavirus COVID-19 thing is we're doing a forbearance. It is a temporary forbearance, and it's tacked on to the end of your mortgage. So your balance does rise as a result of this. You still owe the money. It's not going away. It's going to be tacked on to the very end of your balance. I will caution some people on a couple of things though, because I think this is really important to say. Um, First and foremost, the it does go to your balance, so your balance is going to be higher than yesterday, right? Second, we don't know what the mortgage servicers are going to do to your credit. We have no idea if they're going to report it as late or not. That's the second thing, so you have to be cautious.
Okay.
If you need to do what's that?
I was like, okay.
If you need to do a forbearance, you need to call your servicer, you need to have a conversation, and what is the impact going to be to my credit? Are you going to count me as late or not? Okay. And then I think that one of the other things that you need to consider is don't do it unless you absolutely have to. If you still have a paying job because you're working at home instead of working at the office and you haven't been let go, furloughed, or laid off, make your mortgage payment. It is not going to be good for you in the long run if you defer it or put it in forbearance, as it's called.
Okay, got it. So make sure that you call your lender and ask what are the implications of doing it, correct?
Yes, yes,
And
correct.
two, if you don't have to, don't do it unless you,
That's right.
right?
Only if you have to. Because remember, we're all going to pay for this at the end, all of us.
At the end. Okay, fourth question. What is a mortgage-backed security? I know you did a training yesterday for us, and it was a very interesting type of topic. What is it?
Yeah. So, and I have this really cool slide, and I'm gonna send it to you because I think this would be really fun for you to post on your social media too. So,
Yes.
a mortgage-backed security is basically where we as the lenders will loan money to borrowers, clearly, right? And then the bank or the mortgage company, such as myself, sells those mortgages and releases more funds to lending to be able to sell those to Fannie Mae, Freddie Mac, or Ginnie Mae, or whoever we're selling them to. And then Fannie Mae or Freddie Mac will then do what's called securitize. And what that basically means is, kind of give you an example, we package up these mortgages. We package them up. So this is a package of say $10 million of mortgages for tens of houses across the state that we've done mortgages for, and we package these up, sell them to investors, and those investors will get payment. They're guaranteed payment at a certain rate of return. So that's a mortgage-backed security because the mortgages have been bundled up and then sold. And you may have your 401k investing in mortgage-backed securities. You may have your IRA investing in it. You may have individual people that are investing in it.
Yeah.
People like the police officers could be investing in it.
Actually, I was able to find the screenshot of what you showed us. So
There you
everybody's
have it.
looking at it, which
Yeah,
is
there you have it. So you can see where we're lending the cash to the homeowner for their home as the bank, and then of course Ginnie Mae, Fannie Mae, Freddie Mac again packages up those mortgages into that bundle, and then gets sold to the investors, and then the money gets recycled back where we as borrowers can come and borrow more money.
pretty cool, pretty cool. Okay, last
The
question.
cycle of your mortgage life.
Huh?
Your cycle of your mortgage life.
That's awesome. Okay, so the question everybody wants to know is it gonna get better?
Well,
Just
time
the
will
time
tell.
will
But
tell. And
yes.
what is that we need to look or monitor in the meantime?
Well, I mean, I would say that just like you said earlier, Alberto, is that every market's different. We have these hot spots in the United States, just like you do in the rest of the world, that are unfortunately worse than others. And you're going to see real estate coming to a screeching halt in those places because you're not allowed out of your home. Or you're supposed to minimize your contact, and you're not considered essential, just like I might not be considered essential in other markets too. Fortunately, in our market, we are considered to be essential. I mean, everybody needs a house, everybody needs a place to live, and some people need the financing in order to get it. So that's why we're considered essential. I think that it's important for people to understand that there's alternative ways for you and I to help them where we don't have to visit with them necessarily in person. There's alternatives like this. But I think you're going to see different markets experiencing different swings. And yes, we'll come out of it. We'll come out of it. It's what's called a V recession at this point, and basically it's shaped like a V. We're coming down right now, unfortunately, and we're going to come out of it. And being in a V recession is actually where you want to be. That's the best kind. If you want to be in one, that's the one you want to be in.
So we're gonna bounce. It's not gonna take that long, but it will take months. Not more than a year, but it'll take months, correct?
It's going to be months. Yes, I do believe it's going to be months. The average V recession recovery period is about 9 months. If you look at the average in history of all of the V recessions, yes, it
All
may be
right.
less for us. You never know.
Awesome. Erika, thank you very much for the quick video conferencing. Hope
You're welcome.
we help a lot of people. And if you have any questions, please contact Erika at
210-219-7608 or theslaytonlendinggroup.com.
super simple. We'll put the information here at the video. And of
Thank
course, you can contact me at 210-313-5623. Thank you very much. Bye-bye.
You're welcome. Bye.